Tesla, it is a leader in, a lot of the conversation right now is really this software-based AI, and it should be about that because ChatGPT is the fastest application to 100 million users. But I think AI applied to the physical world is something that's almost overlooked, and we think it's a massive opportunity for Tesla. And you mentioned full self-driving being one of those, powering an autonomous robo-taxi network, and we think that opportunity is so big. That's why Tesla is a top name across many of our funds. And I think they're, experts in vertical integration. We've seen that in the chip in the car and now the chip in the data center, and how they're reworking their entire factories to try and reinvent the manufacturing process and using AI not just to come up with those efficiencies, but also for the robots that are in their factories. And we see Amazon.
Tesla's extraordinary advancements and strategic moves have positioned the automaker at the forefront of the electric vehicle revolution. From cutting-edge technology to groundbreaking achievements, Tesla has consistently outpaced its rivals, leaving them struggling to keep up. Today, we'll delve into the exciting comments of Ark Invest CFA, Tasha Keeney, as she unravels the enormous potential for Tesla to continue leading the EV industry. This recent prediction on Tesla presents us with a unique challenge to look into the future and potentially reap the rewards of Ark Invest's visionary insights on Tesla. So fasten your seatbelts and get ready for a thrilling ride as we uncover the secrets behind Tesla's unrivaled success. Let's dive in.
Is there another Tesla out there, a Rivian, somebody else?
Well, there's certainly other EVs.
No, I mean,
right?
like, you know what I mean? Like, not other EVs, but like another Tesla potentially.
Yeah. I mean, I hear you. It's really, I think Tesla is still at least 3 years ahead of the competition on all fronts, on electrification, on autonomy. They're building a humanoid robot, given, the experience that they have in solving for full self-driving. So that's something that these other companies really cannot match.
Yeah. But again, I just wondered, all the cool stuff around Tesla and the stock, it's like I always say, Tasha, the economy is not the stock market. One can go up while the other's going down and vice versa. Tesla and its stock, at some point, are they the same thing or could they be different? And I mean, because when a stock of this size doubles that quickly, you can't help a guy for having, the radar up a little bit.
Yeah, I mean, I think that, ARK focuses broadly on innovation. And we find that, if you're looking backwards, it's very tough to predict sort of these exponential growth stories that we see. And I think that Tesla is just the perfect example of that. So again, I mean, we think that the expected value is $2,000 per share over the next 5 years. So this is just, it's been an amazing story, and we think it will continue to be an amazing story.
Tesla is the undisputed king of the electric vehicle game, with more than 50% of the market share for EVs in the US. But despite its success, many still believe that the competition is heating up for Tesla, and these other automakers are starting to take up some of Tesla's market share. But are they really? Hey everyone, welcome back to Tesla Tomorrow. Tesla has remained one of ARK's largest holdings for the flagship ARK Innovation ETF, with a total 9.4% weighting. The investment firm has an expected value of $2,000 per share for Tesla stock by 2027, and Cathie, its CEO, has also claimed that in a bull case scenario, the stock could go as high as $2,500 and about $1,400 in the bear case. Ark Invest, in a recent discussion, has once again reiterated Tesla's unwavering dominance in the EV industry, claiming that the automaker is at least 3 years ahead of the competition on all fronts. The firm's analyst Tasha Keeney further stated that she expects Tesla will stay ahead of this competition, judging by its incredible market performance. But why has Tasha Keeney said this? Let's find out real quick. But before we start, if you like this type of content, hit that like button, subscribe, and turn on notifications to keep up to date on everything going on with Tesla. As the world moves towards more sustainable energy, Tesla has a unique opportunity to serve as a leader in this movement, as the automaker continues to focus on sustainability in its manufacturing, transportation, and energy storage solutions. Several US EV startups that hope to ride Tesla's coattails have struggled, and it is unlikely that things are going to get better for these companies soon. the most significant challenges that Tesla is going to be facing are coming from established automakers and a group of Chinese EV manufacturers. However, many of these automakers still have a long way to go if they want to catch up with Tesla. Based on the facts, it remains abundantly clear that despite a long list of compelling new EVs coming to market, Tesla is still the dominant leader, not only in terms of sales, but also in terms of technology, demand, and profit margin. And there are a few reasons for this. First, Tesla has no dealership network. Dealership is a bottleneck in traditional car manufacturing systems because the car manufacturer has to shift and share its profits with the dealers. However, since Tesla sells their cars directly to consumers, they don't need to share profit with a middleman, and as a result, Tesla makes more profit per vehicle. And there's also full self-driving. Tesla has been developing FSD since 2016. Recent progress shows that Tesla's self-driving software is becoming better than any of its competition. Even Tesla itself has got every single vehicle equipped with all the hardware needed for full self-driving, meaning that a customer only needs to buy the software package to enable it. Besides Tesla, no other car manufacturer is developing in-house self-driving software. Waymo, Cruise, Mobileye are not car manufacturers. Therefore, for other car makers to include this technology in their vehicle, they need to license the self-driving software from another company, and this will no doubt increase the vehicle's cost. Tesla's FSD positions it on the forefront of the recent AI revolution. Cathie describes Tesla as a hidden gem of AI-related stocks, believing that the biggest beneficiaries of AI technology are going to be those companies with larger proprietary data sets. In a recent interview, Wood said that Tesla has the largest pool of real-world driving data in the world, adding that the company has more of the kind of information that will become valuable in future endeavors. Cathie predicts that artificial intelligence should increase the productivity of knowledge workers more than fourfold by 2030. And even her firm, Ark Invest, estimates that if AI vendors were to capture 10% of the value created by their products, then artificial intelligence software could generate up to $14 trillion in revenue and $90 trillion in enterprise value by 2030. Given the magnitude of these numbers, it's evident that the AI market represents a massive opportunity for investors, and in this case, Tesla investors. There is also the Robotaxi, one of Ark Invest's most anticipated Tesla projects. In the recent note, Wood and Ark Invest predicted that Tesla's Robotaxis could bring in as much as $8 or $10 trillion of revenue by 2030. The firm predicts that Tesla's Robotaxi business will contribute 67% of its expected enterprise value and 64% of its expected EBITDA in 2027. And that's not all. It also expects that Tesla is actually going to contribute 47% of revenues in the same year, despite having substantially lower margins than Robotaxi revenue. However, while Tesla's dominance is not a topic to be questioned, there are still a few things that the automaker can do in order to secure this position, one of which is by improving its battery technology. Tesla has made significant strides in battery tech, especially with its Model S and X vehicles, but there is a need for continuous improvement with this technology. By improving its battery technology, Tesla can increase the range of its vehicles and make them more efficient. And this would not only appeal to customers, but also it's going to help Tesla to meet strict emissions regulations that are being put in place around the world. Battery tech is critical to the success of EVs, and while Tesla is ahead of competition in terms of battery range, it's critical to continue innovating. Consistent research and development on batteries can help Tesla increase vehicle range, lower costs, and improve performance, ultimately making electric vehicles even more viable for the average consumer. There's no doubt that there are many compelling EVs on the market today, plus many more on the way, and some are coming very soon. However, it's a known fact that Tesla has been the first mover over and over again, and these other brands have to do much more to beat it to market. But do you share these thoughts? Let us know in the comments, and don't forget to tell us what your valuation of Tesla is. And if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.